All right. Good evening, everyone. Just jumping on here to talk with you all for a few minutes this evening. This evening it'll be just myself, and wanted to start off by responding to the second part of the question that we started our stream off last night with. So follow up here was, in your opinion, would a fixed stop placement at a 90% pullback or the start of the breakout move yield unfavorable results or get wicked out against the odds of a second leg? And then question about entering after a signal bar confirms the beginning of a second leg. And I would, if you're trading second legs, I would advise against the second part, which would be the question about waiting for a signal bar, because often that will be, it will create an unfavorable risk to reward. So what you really want to do is better calibrate expectations. So do enough research so that you really understand your setups and can respond to the trade management that the market requires. So let me share my screen here. There's some good examples of what we were talking about yesterday in today's market. All right, so let me turn off the signals. So what we'll do is we'll talk about some of these I1R setups and how they could have been reasonably traded for second legs, and then look at the signals that I trade and how they correlate with these, because as we talked about, I'm not as interested in holding for these longer moves. Um, so here we go with the first I1R of the day, which is a bear I1R after a wedge pullback under a steeply sloped EMA. So bear regime, and after a strong bear I1R, the pullback gets to and tests that 50% pullback level. As you can see here, there's no good signal bar. If you might call 9 a signal bar, but it doesn't have a really strong close. So, maybe you could say this is a weak follow through bar. So you could, none of them are good bear signal bars though. So the idea of waiting for a bear signal bar here would put you at, bar 10 and likely require selling the close. But 10 is also now the bottom of the trading range on the open and testing the open, so higher odds of getting a pullback there. Um, and we'll take a look at my signals, which suggested that was also going to happen. Um, so there's no really elegant way to trade second legs waiting for signal bars, because it will put you in the move later. So what you need to do, or what is more beneficial for the trade management of your system, would be entering with a smaller position size and be willing to scale in. And as long as you're trading legs 1 and leg 2, then you're always, or you're going to have a significantly higher probability of being able to manage the trade even if it goes against you, versus trading for continuation in a third leg. So here we have the pullback to 50%, and then the extension to the previous swing point, so test of the 7 low, and then a pullback here, and the very strong breakout on 11, which actually generates the I1R from the bar 9 signal bar. And it continues without getting any bear bull bars until we get to 15, at which point you can see here the horizontal lines that mark the range of that I1R stop printing, and now we have the bull I1, or the bull bar, which ends the I1R setup. And this one never really pulls back from the time of the close here. And this was not a 30% pullback at that time. Actually, it was. We can pull up some fibs here. So we need. So this is your 30% pullback, which it never came close to. In these scenarios, when you have a very strong second leg, you typically have a much shallower third leg, and so this, you wouldn't want to trade this for the pullback and continuation. You could, but you're really only trading this small trading range here without much expectation for significant continuation. That being said, even when this third leg gets an I1R, if managed properly, like if someone still took the 50% pullback sell here on bar 19, they could get out almost at the reasonable target of the bar 17 low. Didn't quite make it there. But had they managed the position correctly and not held after this bull bar closed here, they could have gotten out without a loss, maybe with some profit. But this now gets to the question about stop placement at the 90% pullback, which I would advise against. And that is for this reason. So if you were to place a stop at 90%, basically you're saying that the So if you get a pullback of 90% of an I1R or any strong continuation setup, then what you're saying is you want to get out before the market fully tests the previous swing point or that signal bar, which would suggest that you're moving into a trading range. So I would not place a stop anywhere within the range of whatever setup you're using to determine a continuation trade. So whether that's a breakout and follow through, an I1R, 3-bar micro gap. I mean, there's any of the myriad options don't really have good stop placements inside of them, because when they fail, they typically turn into a trading range first. And even if that trading range gets a breakout against that the direction of the signal, as it did here, the move will typically test the signal bar, the measure move of the signal bar. So here, signal bar was 16. This is the measured move here, which it tapped twice. And had you been willing to scale in here, you could have gotten out with a profit on that. And depending on how you scaled in, probably break even across the whole trade. But again, it depends on management and how your calibrated expectation suggests you should handle that trade. Now we gave the explanation of why that's the case, but in summary, I would not place stops within the range of your continuation setup, because when it fails, it typically transitions into a trading range before you get a breakout in the opposite direction. And when you do get a breakout in the opposite direction, it typically still provides you the opportunity to scale in and manage the position and get out closer to break even. So the bar 2 is a bear bar. Yes. So these bars are being colored according to the bar direction algorithm that I'm using, which is an abbreviated version of the one that Ali uses. And so it basically looks at the IBS of the bars, so where the close happens in relationship to the open, high and low. And so here, this is closing well above the 50% of the bar range. So you're well within bull territory. This is obviously still a bear body because it is closing below the open of the bar, which is right here. But here you can see this is marked as a bear bar on this chart. The open is here, and it's closing below the 50% of this bar. So yes, you're right. You're looking at the bar direction. You're looking at whether it is the body is a bull or a bear body according to the close and the open. And this algorithm is looking at the close in relationship to the entire range of the candle. So that's why it looks different. All right. So I thought it would be interesting. We're not going to take a ton of time tonight, but to look at the signals that my trend and trading range system generates and discuss how they could be traded in thinking about these leg 1 and leg 2 swings that we see on the chart here. All right. Let me just see which one of these. Okay, this is, I gotta turn this one off. All right. So as we see here, this has a sell. This is technically a sell above signal. So it's coming off a trading range high. But because this is getting a 3-bar micro channel, you're typically not going to get a full pullback to the high of that, and you'll get a 2-leg move across the trading range. So leg 1, leg 2, and this first one has a I1R in it. So the sell here is above bar 7. So this morning, I actually didn't make it to my computer before this setup. So I sold this pullback. So bar 9 this has a buy below signal here. This is a trading range signal. So knowing that we're in a trading range here, but that we are completing a leg one, leg two setup and likely going to test the open, I sold the low of bar 8 on bar 10 and took profit at the open. So that's the kind of trade that I was basically only in the trade for bar 10. Then that generated a buy below signal, so a fade, which got a pullback, and not surprisingly, testing the open, two strong bars, pull back, and then this large breakout here on 11 generated another I1R and created another micro gap. And so this is a trend signal. The triangle is a trend bar signal. So these are okay to buy or sell the close. And the triangles here are micro gap signals, strong micro gap signals. Sorry. So this then you could sell here, sell on the pullback. So because this is different, I'm trading it differently than you would the I1R setup. I have more tolerance for selling and scaling in without referencing the I1R levels. I didn't sell down here. And I did sell. Sorry, I did not sell again. I actually took a measured move of this. So when you get a and this is a trading range signal, but coming off of a leg 3 I1R. So typically you're going to get a 2-leg correction, at least up to test the EMA after that. And this is an outside bar. So funny that this measured move is the same target as the measured move from, I didn't even look at this beforehand. That's kind of wacky. But yeah, both of them put the measured move right here at those highs. So, well, the wildness that is price action. So I sold one tick below the measured move high, expecting that this outside bar would get a measured move when it got follow through. I don't typically fade outside bars because they will often get failed breakouts. So you can have big wicks above and below. And so I placed my sell order here and then just took profit when it came back to test the outside bar high on. So I got filled on 23 and I was out on 24 when it tested 21 high. So that was my second trade. This is another micro gap setup. So micro gap is here on bar 27. 2 strong bull bars on either side, and this one breaking out substantially above the EMA. And you can see these marked here. This is also a breakout from a weak signal bar. It's another one here. You can see the bar 30 is breaking out from 29, which is a bad buy signal. So when those get substantial breakouts, they will typically get sellers at the close who try to get out break even at the bad signal bar high, where they had placed initial orders to fade. And so that's what you see there. They weren't able to get out here. And so we saw the much larger run up. So here I did not trade this one because it was not a large breakout above the EMA. And I wanted to see whether it would get continuation. This got the continuation. I did not enter on this bar. This got the breakout, and I did enter here at the high of 29 on 31, and I held that to the retest of this swing on 36. I was out on 36. And I think that was my last trade of the day because then I had to go do other work. And I'm getting some wacky. I need to change the time zone. There we go. Much better. Okay, yeah, this was when I left. I stepped out at 1, so I didn't trade anything else in here. But you can see the interesting thing, questions about those 90% pullbacks here for I1Rs. When you get I1Rs in trading ranges, they will typically, and this is a perfectly sideways range, they will typically get those deeper pullbacks, which require scaling in. And in this case, this was an I1R. If you scaled in here at the 70% pullback, you could get out at the retest of this bad signal bar here. And then same thing here. This was a bull I1R. If you entered here at the 70%, you could get out right at the high of the confirmation bar. And same thing with this one. If you enter at 70%, you didn't get the option to get out at the as low in the range, but still could have gotten out with some nominal profit. But I think this is a good review of the larger idea of calibrated expectations. And if you take a lot of time to research your setups, which is, as you can see with each of these signals for the trend and trading range bars, I have particular expectations for what it should do. And if it doesn't do that, then I move to different management strategies. And if those management strategies fail, or the market does something unexpected, then I have other steps that I take. So if it's a big surprise against me, or a big surprise in my favor, small surprise against me, or small surprise in my favor, there's different actions that I need to take. And so the knowing that when I'm looking at this as a possible fade because it's an outside bar reversal off the lows of a 3 legs down, I know that I don't want to sell that, but I also know that even if it gets some extension, it's probably going to get a pullback to test this breakout, because this was not a strong breakout of that level. So those are the kinds of expectations that you can use to better or get in at better prices and better manage the positions that you take. Well, so I can. The statistics for continuation are largely dependent upon what your filters are. So, DJ says that I've done some primary study of micro channels with micro gap. Can you talk about your statistics for continuation? Depending on how you filter it. So, for example, let me see. This is okay. I'm going to turn off these signals. So this is a weak micro gap because this is a bull bar and this is a bear bar. This is a strong micro gap because this is a bear bar on one side and this is a bear bar on the other. So that's one of the variables that goes into your filtering process. And typically when you have a weak micro gap, they are prone to deeper pullbacks. And so as long as you calibrate your expectations according to the filters that you use to to prioritize some micro gaps over others, then you should be able to get at least a retest of the swing point that generated the microchannel about 75 to 80% of the time. Some studies, it can be, depending on how you filter, it can be higher. Do you have any specific questions about the secondary filters you're using to determine which microgaps to take? Well, we'll leave that for now. And as you can see here, this indicator just paints the gaps and shows you whether they were strong or weak. And in this case, you can see that the weak micro gap here transitioned into a channel, which then transitioned into a trading range. Um, okay, so if you're using the T+2, here, let me just finish this. And so when you start seeing weak micro gaps in a trading range, those gaps usually get filled. So this is all, obviously also a leg 3 with an I1R and a leg 3. So buying the close of that is fine with a target of the signal bar. So getting the stops run, um, right here. But same thing here. When this weak micro gap gets created, selling the close here with the target of the at least the top of that gap. Um, there's no micro gap in this one, so an even weaker I1R that actually the micro gap triggers on a bull bar, and characteristically different now than this micro gap, which triggers on a bull bar and is actually, when I ask, DJ, do you see what some of the differences might be between this one and this one? Well, while you think about it, let me answer the question about the T+2. The T+2 is great, but those are all filters that you can test for their effectiveness. You probably don't need to use all 10 because all 10 are not necessary to prioritize some setups over others. So, um, yeah, trading range versus W reversal. Absolutely. That's one of them. Slope of the EMA is another. This is a steeply sloped EMA, and here it is perfectly flat. So we know that these are more trading range conditions, and these are more trend conditions, and you're getting the reversal in a trend. So this is a W, a wedge reversal in a bear trend versus a test of the trading range lows in a trading range environment. So yeah, that's the one of the most significantly one of the factors most significantly determining the different ways that this bull signal bar or bull confirmation bar, uh, the effect that it has on the setup as a whole. So as far as the T+2, I would go back and figure out which of them have the most significant impact on the setup, because some have a disproportionate impact. So if you apply the Pareto principle, you're going to have 20% of uh, the data, the filters, having 80% of or leading to 80% of the outcome. Uh, so you want to prioritize those, and you really don't need to spend much time on the others once you determine which ones are more effective for the way that you want to trade it. I've mentioned before that my I1R system is generates higher probability trades when the setup is also breaking out of a previous swing point, as this one does here, as this I1R does here, and when it is breaking out of the EMA. So you can see that this one is, no, that was above the EMA. So this I1R breaking out above the EMA and breaking out above this previous swing point. So this is a candidate for a buy the close here, and scale in, add on pullbacks. I1Rs and trading ranges are great fades. Here's a good I1R. This is a sell the close when it breaks out of the EMA and gets a strong close below, as is this one. So when you get bar 61 here, breaking out below the EMA, that's a sell the close. This is a great example of a fade setup. So this is an I1R that generates on a weak breakout of the EMA. This is a sell setup. So implied micro gaps. So you mean like front running the micro gaps? It sounds like example 1129. Bar 20. With the anticipation that it will create a micro gap. So the bar 20 would be a micro gap? That this one would be? I mean, this is a micro gap here. My indicator doesn't. This is an indicator that I developed to look at a specific type of micro gap setup. So it is filtering micro gaps that don't have strong closes. So if the close is not within a certain threshold, so like that's why this one doesn't get. This one doesn't generate a micro gap here, but this one does. So this is a strong close. And here you see the micro gap. But I haven't done any research on those. I mean, typically, if what you're thinking is you have large breakout bars that have a higher probability of not getting enough pullback to close the gap, then depending on your other filtering criteria, I think it could make sense to front run the micro gap. But the idea of the micro gap is that it typically gives you a pullback entry because after 3 bars, the market typically has some kind of a pullback. And I don't know what kind of advantage you would be getting um, if you sold the close or you've tried to front run, because the expectation would only really be 1 more bar before more pullback, if that makes sense. So I think we'll keep it short tonight. That was a good quick rip, and we can pick it up with Brad in the next couple days. Go over some more questions, and uh, we're making the best effort to answer questions that are left on the videos. So if folks go in and comment as they have been, we'll take those questions first and usually begin the streams with those. So definitely get in there and leave questions, and we'll make sure to answer them as best we can. So looking forward to seeing you all again soon. Have a great night.